Alrighty, folks, you heard it on the daily financial news from March 18th. Chamath, Polyhapatia, I think I got that right this time, from the All In podcast, and a billionaire, I think he's a multi-billionaire, former owner, or partial owner of the Golden State Warriors. He is out with a big call, basically saying that President Trump is going to go after the wealthy, aka the asset holders, and essentially redistribute wealth. That's essentially what he said. Again, I have a quote that I wrote down while listening. I think the great thing about Trump is he is going to reset and take a lot of wealth from the asset holders. So what I wanted to do here with Dion is talk about AKA what are assets, because I think we know some of them, stocks, real estate, but there's plenty of others that people call assets, some good, some bad. But I think there's a lot of truth. I think there is a lot of truth in the fact that we are going to see a reset in asset prices. We saw runaway asset price inflation as M2 money supply increased and assets didn't keep up, didn't grow. So what happened? They just cost more. So Dion, what do you think? Is Chamath Polyhapatia right that asset prices, all asset prices, are going to crash?
Well, I don't think they're going to crash. I think they're going to change, because the idea is it's a wealth transfer. Wealth has no value unless it's transferring. I think while there are probably thousands of categories we can put people into, I'm going to talk about three categories. There's I think the people with $50 million in net worth or more, asset rich, that their net worth fluctuates by a large percentage, right? Elon Musk just lost about, I want to say, almost 20% of his net worth in the last 6 months. Does he care?
No.
Right?
Yeah,
it's like
I
that
don't
Chris.
think he cares.
It's like that. I think it's Chris Rock joke. If you have $30 million and you lose half of it in a divorce, you're angry, but you're okay. If you make $30,000 a year and you lose half your stuff in a divorce, you're not happy.
Right.
So you got the super wealthy.
Okay.
Then you have the people who watch content like this that are making decisions that impact their net worth. Do you buy the asset? Do you buy the house? Do you buy the flashy car? You're actually thinking of items in terms of asset versus liability. I think there's three categories there too: asset, liability, bad asset. And then there's the people who never watch this kind of content, that don't think about money, that are shocked that they're all of a sudden 65, have zero saved for retirement, right? It's 48% of Americans between 55 and 65 have zero saved. So that's not an insignificant amount of people. It's almost half of people in the US. Wake up one day and go, I'm retirement age and I have nothing. And they've probably never watched this content. They don't know who, they don't even know who the All In podcast is.
Right.
And they do, like you said in your daily update, see the headlines. And so when they struggle, they're going to say, whoever's in office, it was the last 4 years, it's the next 4 years. That's why I'm broke. Doesn't matter who it was, because that 48% are in that position of being broke. So my goal, I don't think that there's any $50 million net worth person who's going to go to Dion Talk Financial Freedom and take notes, right? But I think that I can, talk to the people that are choosing. When do I buy a house? When do I stop house hacking? What are toxic assets? And what do you mean by that?
Yeah, I definitely want to dig into that toxic asset, but I wanted to kind of go through just a broad brush of assets, because again, I follow a lot of content creators out there, and frankly, there are some assets that are truly crashing right now. So for example, one of the guys I follow, because it's always fun to look at, are classic rare cars, right? And if you look at some of the prices being paid today versus what they were, call it 3 years ago, we're talking 30, 40, sometimes 50%. Now, if you happen to be an owner who bought at the peak and have to sell for whatever reason, your asset, that classic car that frankly you probably don't even drive, crashed 50%. And now again, when you think about rare cars, or frankly any collectible, comic books, trading cards, I guess where my mind goes, guns, maybe in your world, Dion. There was a time where those were bid up to, frankly, nosebleed or stupid levels. And really that whole collect art as well. I just got off a big art cruise. Art's coming down. So I think there's, I don't know if you call these toxic assets. I'll love to hear that definition, but these things, these rare old things, these collectibles, they are crashing. And if that is what you call an asset, I think Chamath is right. Those are going to reset much, much lower. What do you think?
So they're that's super wealthy category, 50 million plus. They do the 1% of net worth put into crypto, 1% of, any asset class that person hasn't studied.
Mm-hmm.
And then there's the whole world of your tax impact you can use art to do. So I don't understand that enough to make content on it. I just know that it's a thing that is above my level. So that part of that I'll never understand. But the people buying those kind of things aren't buying them thinking, okay, I'm going to hold it for 2 years and then sell it. I'm going to hold it for 5 years and then sell it. This is a store of wealth. And this is where I come down to, and I probably irritate some people that watch Kiyosaki. I don't think precious metals are a sound investment either. They're not an investment. What they are is a store of wealth. Yes. And the problem is with the assets like that is, let's say it doesn't even crash. Let's say it just keeps up with inflation. Mm-hmm. And people say, well, at least it kept up with inflation, whatever that was. Sure. But when's the last time you bought an ounce of gold?
Me?
Yeah.
So I own some, but it's probably been, oh my God, how old am I now? It's got to be 25 years.
Right. I have a few ounces too. I go with 10th ounces, little, they look like a dime basically.
Yep.
And it's tradable when the zombie apocalypse happens. That's
the smaller, that's a good, I mean, that's one thing I have is the small stuff, right? If you want to play the apocalyptic game and you got to trade silver or gold, it's not the big stuff, right? It's going to be the little stuff. So very smart.
So the reason I don't call it a store of wealth is when I purchased it, I had the cost of purchasing.
Correct.
Which the fees can be up to about 10%. They can be down to 2 or 3, but they can be up to 10%. When I go to sell it, I'm going to pay fees also. So there's bookended fees on the asset that kept up with inflation. So if you then add the fees in, did it actually keep up with inflation? So it doesn't cash flow. It doesn't grow. Now, there are times where interest rates and the economy do a certain thing and the price of gold spikes. And if you time the market, which we know how that works out in any asset class, it can work out. Or it can be gambling and you can lose a ton of money. Yep. So, there's those things that people do that they buy things like, and there was a time I think I came back from Desert Storm, and while you're on deployment, you really don't have a lot of ways to spend your money and you get combat pay. And so I had at the time $1 billion, which was like $13,000. I'm like,
13 grand equals $1 billion.
Right. When you're in your early 20s, like you're the richest person you know. And so, I bought the nice car, the nice motorcycle, what I thought were investments. Right, to the young Marine, like that's my investment sitting in my yard, losing value every day, costing me money every day. And so the classic car in the shed, when a certain economic situation happens, the value is going to go down because luxury is one of the first things to go. Yeah. And then there's the upswing times too. So again, it comes down to timing the market. I think anything you have to time doesn't work with people that are trying to reach financial freedom or early retirement, because we don't get to time our age. Yeah. It would be nice if we could, but we don't. And so to me, those toxic assets are the ones that don't do what people expect. Kiyosaki says in 1997, your house isn't the largest investment of your life, which is what people had heard for the previous 50 years. Right? The banking industry had a pretty good marketing slogan of make sure you get a big mortgage because this is going to be the biggest investment you ever make in your life. And Kiyosaki said, well, where you live is a liability. And I think it's kind of like that Schrodinger's asset or liability. We don't know what it is until you look at the numbers. If you buy a house, it's a big liability. If you rent out the rooms and it generates income and reduces your cost of living, it's an asset. So the toxic purchases could be, let's say you buy a rental and it cash flows as a short-term rental, but you didn't run the numbers and see what it would run like as a long-term rental. And then the municipality comes in or the state loses its lawsuit with the hotel chains. And all of a sudden, no short-term rentals allowed. Or Washington State has a bill up right now, increasing the vacation tax on short-term rentals by a certain amount, which could make it not viable if it goes up large enough. So all of a sudden, your asset that was cash flowing, that was appreciating, is losing money, lost its value, and you're stuck with it. Now you're paying more than it's worth. So not only can assets be toxic that look good, that cash flow, but I think toxic assets are also those assets we don't understand. If you don't
yeah, I agree with all of that. And really because again, I've not only lived through, but studied economic history. And, I think there's a lot of truth in what Chamath says. You're calling them toxic assets. I'll call them non-traditional assets, whatever. We had a lot of people, enter the arena because, again, they felt flush. They had your moment of 13 grand as a young Marine, and they just started buying crazy things. And those crazy things went up, right? You could even throw crypto in there, right? And, suddenly we had a lot of new players. And unfortunately, what happens when we go through the first recession as a new player, it doesn't end well for you, right? You got to kind of earn your scars. And I think he's right. I think there's a lot of artificial, again, non-traditional assets that went too high, and we are about to see a reset or a redistribution or whatever you want to call it. So that's non-traditional assets. Let's go to small businesses. Again, I think one of the things that we're going to see, if Chamath is right, is, businesses are going to be worth less, right? Traditionally, it's, take their profit, throw on some kind of multiplier, and that's what the business could be sold for. Very simple, but it is that. If we go into a recession, obviously revenues fall. Obviously, you probably have to eat margin. Usually that, whatever that multiple is also gets cut. So, if you were making $1 million and you had a 10x multiple, you could sell it for 10 million. But if suddenly you're making 600 grand and the multiple goes to 5, now you've only got a $3 million business. And to your earlier point, if you're that asset owner, you lost 70%. You still have the business. It hasn't sold. The recession will be over at some time and you could go back up. But if you have to sell, you're taking a haircut. And that's happening, I think.
So to put it in terms that people that watch one rental at a time might appreciate, hopefully this is what I would look at it, because I've ran a business and I knew that whichever way the political leanings were going didn't matter. I had a plan for both, right? Because we really have a two-party system. So this is what happens if they win. This is what happened. This is what I do, right, to run the business. Where you worry about locked-in losses is when you become a forced seller. So if you own a rental and it's worth $100,000 and it's cash flowing and you're happy, and all of a sudden it's now worth $80,000 or $60,000, you don't care. You're looking around going, oh, it's a buying spree. I can buy the next rental that's bringing the cash flow better because the cost is lower. If you own a $100,000 rental and go through a divorce and have a death in the family and lose your job, and now you're 10 evictions and you didn't keep good reserves and the property value is only 60,000, that's not a good situation to be in. Same thing with the small business owner. The crash matters if you're a forced seller.
Yes, exactly. It's really interesting when you think about small business owners, real estate owners. If you happen to become a forced seller at the wrong time, that's when it hurts. That's when it leaves a mark. But most of us, certainly if you're following one rental at a time, we don't buy alligators. We don't create alligators. And it may not be fun, but you can hold till you're on the other side of whatever we're going through. So we'll get to real estate in a minute. So I absolutely do think businesses will be going through a reevaluation. And to your earlier point about Elon Musk, Musk could lose 50% of his net worth. Won't matter. He's not selling anything. So let's go to stocks. Again, an area that neither you or I play in greatly. They are down 10%. Again, if you look at the broad indexes, I do think one of the things that does see a haircut, if Chamath is right, is, again, stock prices. They're just like small businesses. They're going to earn less money. The multiple on them will be lower. And bingo, bango, we have a bear market. So that's my simple view.
So simple view from me. I'm going to steal this and give credit whenever I can. I try to say, hey, I heard this. This is where I heard it from. Jason Hartman. Right. I'm going to use his compared to what. Right. I'm a Jason Hartman fan. Watch almost everything he puts out. A little jealous of the amount of traveling he does compared to me. I got to step up my game.
Dude, he's making you look bad.
Yeah, no, he's awesome. So compared to what? When people talk about, they use the scary numbers. It's lost 10% in this amount of time. It's down, I think it was 5 point something trillion dollars, right? Okay. So how was the stock market last month? Reaching new highs, breaking new records, right? In 2022, the United States full stock market saw a 20% dip. It was about $11 trillion. So if in 2022, we have this massive 20% drop and 2024 is breaking records, if we see this is why stocks, the main reason stocks aren't mine is I have not mastered that. I've not taken the 6 months to 20 years to master the asset class.
Right.
But that volatility, that would bother me. Right. I think with my rents, I've tracked a couple of big jumps, right? There was, they threatened rent control. I start making $3,300 more a month because of that. They have a pandemic, an eviction moratorium, and a rent freeze. So the next year rents went up 30 to 40%. So the binder strategy got me 28% or so in my market. So I know of a couple of big jumps, but from 2013 until today, it's just this rents like this.
Yeah.
And then there's these jumps every now and then. But the stock thing of the 2 hours a month it takes me to manage my portfolio is very low stress. Yes. The 2 hours a month staring at the charts, watching the vertical ping pong that stocks play would make my hair fall
out. Clearly it's already happened. No, but that's exactly, again, this is, I think Chamath is right? I think there's going to be an asset revaluation, which again, if you really want to step back, it's always an opportunity, right? When assets get repriced, if you are doing the work and if you understand it and if you are disciplined and all those things that we teach at One Rental at a Time and Dion Talk with Real Estate, you can make big moves, right? You can make some big moves because you make your money when you buy, not when you sell. Now let's get to the last asset, which is the one that you and I have well over 90, if not 99% of our wealth in, and that is real estate. And more importantly, residential real estate. So we'll even take commercial and put it off to the side. So to be clear, 1 to 4 units. I saw many people take Chamath's concept of asset. I just want to get back to the quote: reset and take a lot of wealth from asset holders. Take that quote and say that real estate, residential real estate, is finally going to crash. That's what they said, Dion.
Well, I mean, people have been saying it for 12 years. Why not 13?
Why not 13?
What would stop 13 from happening? Yeah. I hope he's right. I mean, well, first, I guess, as an investor, most people hope for a crash or a price correction so that you can buy things on a cheaper sale. We don't often think to the next step of, well, how many people are losing for that crash to happen, right? I don't want that to happen. I don't want people to lose. But if the crash happens, it's a buying opportunity, buy the dip, right? I don't time the market. I dollar cost average, which means the two things with dollar cost averaging in real estate is am I ready? Did I find a great deal? I'm not dollar cost averaging on a timeline. It's I meet two metrics or two criteria and then I buy. So if a crash happens, I'm in price, but not rents. I'm probably going to see more deals pop up. Yep. I'm ready. So I will be buying. Would it bother me if the properties that I own dropped 20% and my net worth, if the gross value drops 20%, my net worth drops by a lot more than 20% because I have debt against it? Yes, that would be great. I would be going, hello, Mr. Tax Assessor. I'd like to have a conversation with you. Let's reset these to what the value is based on market trends.
This is a really important point because, again, a lot of people focus on what accountants call the balance sheet net worth. I have never given a rat's ass about the balance sheet, except that one day a year, I owe a couple of my banks my personal financial statement, which is the balance sheet. I care about the income statement, but more importantly, it's that third financial statement that no one talks about, and it's called the cash flow statement. I live off the cash flow statement, right? Money in, money out, cash in, cash out. I don't care what I don't care if my net worth falls by 50%. I really don't. If my cash flow fell by 50%, now you got my attention.
I'd have to do the math on when that would become concerning for me. I'll probably make a video. How far would rents go? How far would rents have to drop for me to go back to work?
Oh, that would be a good video.
I'll probably do that. I'm gonna write that down. I'll forget it. So let's take it to the next step. How net worth doesn't really matter to us. I would have no clue what my net worth is, except in 2021, I did a video of what happened first: $1 million in net worth or $1 million in debt. They both happened on the same day. January 6th, 2020, not 2021, 2020, January 6th. When I closed on my fourplex, net worth passed $1 million, debt passed $1 million. And then I was thinking, I was going for a DSCR loan with Convoy Home Loans. Very nice to work with them. Ended up not getting the deal. But in order to do the DSCR loan, I had to do that grown-up sheet of paper you talked about, the personal financial statement. So I reached out to Matt and I was like, what is this? How does this work?
What is this thing?
I didn't even know. And then when I did it, I was like, wow.
Ooh,
that's
sexy.
It's tripled in 3 years when I did that. So if you know your net worth because you do your personal financial statements and you make YouTube content, so you're studying how your percentages go as your portfolio grows, take it to the next step. Do we think Elon Musk knows or cares on a daily basis what his net worth is? Or does he know it the way we do it, of some website going up, here's what the chart of the 10 richest people is and what's going on in it? He goes, oh, I guess that's the current change.
I've been lucky enough in my life to get around a lot of people worth more than 10 million bucks. And I got to tell you, I bet at least 80% are somewhere between don't give a rip and, look once a year when they go see their accountant. But I got to tell you, there are some people that are very ego driven and, they look at it. And I know one guy who looks at it weekly. Right. That's a little wild to me. So I get why people talk about it, because it's a big flashy number. It's 8 figures. It's 9 figures. But you don't live on your balance sheet. It's just wild that people are focused on
it. Yeah, there's this thing I try to get people to understand on my channel called fuzzy math. And I want to get people to fuzzy math as quick as possible. So when we're broke, when I was broke, when I know friends and family who are broke and I'm trying to help them, and you get your bank account down to $18 before your next paycheck hits. And your timing, if I do a Venmo transfer, it doesn't actually hit the bank until this time. And you're doing all those things, to the penny what's going on with your finances. And you think that's somebody who's focused on their money. About a year ago, I was watching Christian and Cody when they were still together on the multifamily strategies stuff. And they were interviewing a young lady, probably 25, maybe 26. And she was doing some deals. And she said, well, yeah, on that one, I think we put like 20 or 30,000 into it. And we made like 80 or 90 by the time it was done. Like a $10,000 swing on expenses and a $10,000 swing on income. Didn't matter. What she knew was that it was a good deal worth pursuing. She didn't have to worry. It was not that she didn't have to worry about like the $18 in her bank account, but it's when we study the cash on cash return or looking at an asset, I don't do the calculations to find out how much I'm going to make every month. Right. I'm not looking, okay, that's a 10% return. I'm going to make $437. That's not it. It's going to get a 10% return. How does that compare to all the other deals in my market currently? If all the other ones are 6, amazing. If all the other ones are 14, not a good deal. It's fuzzy. I'm not worried about that. So that's the way I look at, if we're going to see this kind of correction, the fuzzy math should tell us buy an asset, sell an asset, have bigger reserves, think of ways to increase income without increasing rent, like raising deductibles on insurance or going and talking to your county tax assessor to reassess, or all of those other things that you can do, adding square footage if you need to. Instead of the world is ending, I'm going to sell it all. I'm just going to hold on to cash and be ready. Because there was we made a video when I think his name is Richard Fain, made a video. I'm going to sell my house because everything's going to crash in 6 months, and then I'm going to buy a bigger house. He made that video, and it got a ton of views. He came back a month later and said, I thought about that. That doesn't seem like a good idea. He never did it. But we talked about how bad idea trying to time the market like that would be. And that's what I'm hoping people don't do. When they hear a really rich person say, it's all coming down.
Yeah. Yeah. At the end of the day, folks, you know, recessions happen. They're a natural part of the business cycle. Recessions reset asset prices. I don't think it's unreasonable to say that we have had a long bull run accentuated by 4 years of a pandemic and the government and the Fed with the money printer on, which made asset prices go up. It's not unrealistic to think that assets are going to reset. The only problem is when you become that forced seller and you've got to sell at the bottom, which unfortunately some people do. And some people are also emotional. Back to your talk about stocks and the little blips. You know, since I've been following stocks, people buy at the top and sell at the bottom. It's almost a human condition. So, folks, that's to talk about Chamath and his call on asset prices and redistribution of wealth. Dion, where can people find you?
Well, the last thing I'll wrap up with here to kind of give some ear candy to the people who stayed to the end of the video, thank you for being here, is I'm going to break people's brains and say it's okay to have toxic assets, and it's okay to have liabilities, right? Zuber, we have a little bit of gold. I have a guns collection. You have crypto. It's less than 1% of net worth, of gross value of the portfolio. Sure. We've taken cruises. We've spent money on, you have your car, like you've loved the car. You were super happy with it. I went through a series of cars because I didn't know which one I liked. It ended up being, it was an F-150. like super basic, but I had the Corvette, the Tundra, the Raptor, I think I went through everything, every 10 midlife crises, but an asset pays for the toxic assets. An asset pays for the liabilities. That's what people need to take away. And you can find me on YouTube, Dion Talk Financial Freedom, where I do a live stream every Tuesday, 4 p.m. Pacific.
You're amazing, bud. Take care.